So as per the recent data that has been published by SEBI, which is Securities and Exchange Board of India, and APMI, which is the body which manages all the portfolio managers in India. So there is a clear-cut indication that AIFs are being preferred over the portfolio management services. So India's wealthy people, and especially if we talk about HNIs, ultra HNIs, and NRIs, they are preferring alternative investment funds over portfolio management services. How they are doing that? So AIFs are gaining. So as per the recent report that has been published, recent numbers that has been published, that AIF, which is alternative investment funds, are gaining serious traction, and AIF industry is growing at 3x, more faster than what portfolio management service is growing, as the numbers has been reported in the financial year 25. Despite a higher ticket size, in AIF we require a ticket size of 1 crore, whereas in a PMS we require a ticket size of 50 lakhs. So still investors are preferring alternative investment funds. To tell you the reason why they are preferring AIF, let me explain you the basic difference between PMS and the AIF. So in a PMS you hold a customized portfolio, the shares are held in your name, you need to open a demat account, and you handle your taxes personally, and you can invest only in listed securities, and mostly the fund structure is an open-ended kind of a structure. Whereas in a AIF you invest in a pooled structure, just like a mutual fund does. So tax is deducted at the fund level, and your AIF can invest. I'm talking about a category 3 AIF that can invest 25% into unlisted equities, and there is no need for a personal demat account to be opened, and it is available both in open-ended as well as in closed-ended structure. Now, if we talk about a snapshot, the data that has been reported, so there has been a 60% year-on-year rise in the AIF category 3 commitments. If we talk about PMS, there is only 19% year-on-year rise in the commitments of PMS. So why is there a 3x growth in AIFs? Let's understand that. So there is a clear-cut indication that AIFs are winning. The reasons are that there is no operational headache, like you don't need demat, no tax filing, nothing. Tax is taken care by the fund itself. That's a very good advantage. And then you have access to unlisted equity. Like as I told you, your AIF can invest 25% of the capital into unlisted equities. And then you have a flexibility of open-ended as well as closed-ended funds. Both are available. Then for NRIs, it's a simple structure, whereas in a PMS for NRIs, it's a complex structure. It takes 3 months to open an account in case of NRI if you want to invest in a PMS. Whereas if you want to invest in a AIF, it only take approximately 7 days to onboard you, and then you can invest in a AIF if you are an NRI. The bottom line is simple. PMS remains a strong tool for equity-focused investors, and AIFs offer a more sophisticated, flexible, and investor-friendly structure, which explains their rapid adoption. Like we have seen the data, AIF industry is growing at a 3x faster rate. Now, a combined AIF today, combined AUM, if we talk about of AIF and PMS industry today, it's around 22 lakh crore in rupees. And it is expected by 2030 that this AUM is going to be 100 lakh crore. So that's a massive number. So investors, the fund managers, the distributors, all are closely watching this space. So thanks for watching.